legit. Anything you want.
Van Eck Associates CEO, Bitcoin investors are moving to gold. Jen Van Eck, CEO of Van Eck Associates, suggested that Bitcoin BTC investors have moved to gold during an interview with CNBC published on January 26. Van Eck declared that he thinks had Bitcoin pulled a bit of demand away from gold last year, in 2017. Afterward, he concluded, interestingly, we just polled 4,000 Bitcoin investors and their number one investment for 2019 is actually gold. So gold lost to Bitcoin and now it's going the other way. During the same interview while talking about Bitcoin exchange-traded funds ETFs, Tim Seymour, founder and chief investment officer of Seymour Asset Management, declared that Bitcoin's function as a store of value is questionable. Not only have we lost all liquidity on the underlying commodity but truly outside of the existential blockchain argument, it's been very difficult to argue store of value, which is really what we started hearing about. Gold is a store of value and there's no disputing that. Van Eck's firm created what CNBC defined as the most well-known gold ETFs, namely the GDX Gold Miners ETF and the GDXJ Junior Gold Miners ETF. Van Eck declared that those assets have been acting tremendously well over the last 2 or 3 months before underlining that they seemingly do the opposite of what stock markets do. And the majority of the days in Q4 when the S&P was down, GDX was up, he said, before concluding that decoupling makes me really excited about gold shares as a diversifier. Furthermore, according to CNBC, the GDX ETF grew by 14% in the fourth quarter, which according to the article is its best performance since Q2 2016. Moreover, the GDX is up under 1% this year, as the S&P 500 grew 6%. As Cointelegraph recently reported, the Chicago Board Options Exchange's CBOEBZX Equity Exchange has withdrawn its request for a rule change by the United States Securities and Exchange Commission (SEC). The requested change was meant to permit the listing of the ETF backed by Van Eck and financial services company SolidX. At the end of last year, Bitcoin's BTC average daily price change was the lowest value reported in the past 9 years, Cointelegraph reported. If Bitcoin BTC falls under $3,200, hodler should GTFO, bearish trader. Former Bitcoin short seller paints bearish picture recently. Art Dow, a preeminent hedge fund manager and killed chartist, took to Twitter on Tuesday to make an unexpected declaration. In a tweet seemingly poking fun at crypto-zealous bulls, Dow wrote that he would be saying goodbye to his Bitcoin BTC short, which he purportedly opened during the asset's peak in late 2017. In a phone interview with Bloomberg, the ostensible Bitcoin bear made it clear that his tweet wasn't made in jest, adding that he was one with the position. Speaking to the outlet, Dow explained that he doesn't want to try and ride this thing to zero, potentially indicating that he sees some semblance of value in BTC. Equating his anti-BTC forecast to a lemon, he stated, "Don't want to try to squeeze more out of the lemon. I don't want to think about it. It seemed like the right time." The current head of Southern California family office then explained that he already took profits twice this year, making the covering of his controversial short more than logical, especially from a risk management standpoint. Just a few weeks later, Dow has taken to Twitter again, this time to paint a bearish picture for BTC's prospects, specifically from a technical analysis outlook. The American Economist recently wrote that BTC's chart remains beautiful, but noted that if the asset cannot breach $5,000 or $6,000 prices levels in a bounce, EBA bulls will be in for a tough time. Dow added that if BTC breaks below $3,200, a long-term line of support is stipulated in the chart below, then hodlers need to GTFO, likely accentuating the importance of this line of support. Maybe not Bitcoin fundamentals still booming. Although Dow's call shouldn't be fully disregarded, his use of traditional markets analysis in crypto threw some for a loop. One Twitter user, who goes by the moniker Investment Wizard, noted that Bitcoin's fundamentals are stronger than ever, adding that even if TC reeked through the carry yellow line, the end wouldn't be nigh for the flagship cryptocurrency. This isn't an isolated outlook, far from. In fact, Armin van Bitcoin, a pseudonymous, yet prominent cryptocurrency zealot, recently claimed that Bitcoin has undergone a handful of developments that made 2018 the project's most successful year. Bitcoin saw the 0.16.0 and 0.17.0 installments of its core software go live, the former of which aided SegWit's arrival to the mainstream. Blockstream LSO made strides, allowing offline consumers nearly all across the globe to access the Bitcoin blockchain via a series of utilits. And even while the network's hash rate is essentially stumbled, it remains up by 400% year-on-year, accentuating the fact that miners still see value in BTC. The SegWit protocol has also seen an adoption uptick, moving from 10% to 40% from January to now. Moreover, there is a mass of traders who believe that BTC could break under $3,000, but still have a positive future ahead of itself. Anthony Pompliano, for instance, recently stated that BTC could fall under the aforementioned level, but he remains bullish on the cryptocurrency. He explained that in the end, when you boil cryptocurrencies down, they're driven by math and software, rather than the nefarious individuals that can plague traditional industries. This is, of course, crypto's underlying value proposition, and this industry's fundamental narrative since its earliest days, or blocks if you will.